Hey everyone, and welcome to another Sunday Scan. Today, I'm joined by a special guest. We have our resident swing trader and technical analyst, Judah, with me. So Judah, thanks for joining me.
Yeah, thanks for having me on, Chris.
Yeah, absolutely. And we have a lot of good topics today, so let's get right into it. Um, SPY, the market still grinding higher, definitely still showing strength. We had some news of a big rebalance sell this week in technology. It was supposed to be 30 or 40 billion. I saw some different numbers depending on the source. And I have to admit that I was waiting for an end of the week kind of, a sharp drop based on that, but it just really never came. So there's a couple of scenarios. Either the numbers were off or, it was really sold or distributed throughout the week. And so we didn't have this one sharp sell-off day for the end of the quarter rebalance, but it was more just, you could see the weakness in NVIDIA, and every time it tried to rally, it sold back off. So you could have had that number kind of dissipate through those names as it went down there. So it's just like a good reminder that even if you have, what you think is a good idea, or you have some data that you think could move the market, just keep an open mind, and it might not look exactly how you think it will look. I've also noticed that we've been having, more sector rotation. Commodities, energy, they continue to be strong. We've talked about copper before and things like FCX, which have really, slowly but surely been moving higher and breaking out of a multi-year kind of base. And another thing that I've noticed, or another sector, is I think that the gold sector is going to start to heat up a good amount here. And it's kind of that same anchor theme that we talk about, where it's you have, the ship, which is the gold price, and then the anchor, everything it drags behind it, which is going to be the gold mining stocks, the gold ETFs, and things like that. So you had gold crossover, I think 2200 or 2250, and that's an all-time high. And I really think that after the FOMC and the Fed said that they will continue to try to cut rates before the end of the year, and it's running the market hot. They're saying that inflation can come back up a little bit, and at least so far they haven't backtracked that statement. So I think that we're going to have a lot of things like commodities, the short squeeze names, maybe even some small caps. I think those really outperform when you have an environment like that. So that's definitely something that I'm watching, is the gold sector. And the gold mining business is similar to kind of the Bitcoin mining with the Bitcoin price. The mining business is a really tough business, and it's very cyclical. And part of the reason for that is because the margins of the miners are basically based on what is the spot price of gold trading at. And so if you have a miner and it costs them, $1,900 an ounce of gold to, kind of break even, and gold starts going up to 2,000, 2,200 or things, the margins are expanding. And so you get these huge cyclical rips, because a company that went from being break even or not profitable is suddenly their margins are doubling, tripling. And that's why you can have such a cyclical nature. But over the long term, they're usually not very good businesses, because you have, maybe 6 months or a year of, really good prices and a good environment. And then the rest of the time, they have huge capital expenditures they have to make. They can't control their commodity price. And a lot of the miners just don't do well super long term. So it's something to keep in mind, but you do get these big cyclical rips as those margins expand. And so that's definitely something that I'm watching. A couple other things that we saw this past week is, you had these IPO style names. We have, the two main ones that had everyone's attention were Reddit, and that was a true IPO. And then you also had DJT, which was the Trump media kind of SPAC deal. And so I just want to highlight some of the differences between kind of a SPAC merger and an IPO, and just give a couple of data points around that, just in case anyone wants to become a little bit more familiar with like the process of what goes into that. And so just a few things to keep in mind, that with an IPO, when it's truly a private company going to market for the first time, there's a couple of things that go along with that. And one of them is they usually don't have options traded on them for at least 3 days. It can depend on the exchanges, but many times it takes at least 3 days for the options to show up or to be able to be traded. You can usually short sell them right as they list. That's usually available. When IPOs hit the market, it's typically only about 20% of the outstanding shares that they'll actually list. And part of the reason for that is because they don't want a supply glut to hit the market and basically collapse the share price. And so that's actually that leads to the next point of like lockup periods. And you have this for insiders and people who are owners of the company pre-IPO. They typically can't sell for 90 to 180 days unless there's like a written exception from the board. And that's actually, a lot of people think that that's an SEC thing, like a mandate, but it's not. It actually comes from the company itself or from the investment bank that underwrites it. And the whole purpose is to not let too much supply come to market immediately and again hurt the share price. So that's with true IPOs. There are a couple of like odd exceptions, like the lockup period, and we actually saw that with Reddit this week, how insiders were able to sell $41 million worth of stock, but it wasn't common stock. It's what is called it's like performance-based stock, and so what that means is that pre-IPO, you'll have these shares that are set aside as basically a compensation or a bonus for the insider, saying that if they can get the share price up to a certain amount, then like those performance shares are vested immediately. And so for Reddit, that was at like the $31 mark. If they got their share price above that, then the insiders and the management got this like bonus. And so that's actually what they were selling. It wasn't their common shares. It was a specific like a performance-based share. And so I think that you could have some info come out about that over the next week, because a lot of people were thinking that Reddit insiders were just dumping their holdings, but that wasn't quite the case. Typically, the insiders will sell those bonuses to cover taxes and things like that. So maybe you have a rally back in Reddit after some more information comes out about that. And so that's like a true IPO, and that's a little bit different than like the SPAC merger with the DJT. And that's basically where a public company like a DWAC was actually already trading and it had options on it and everything. And then they did a reverse merger with the Trump media company. And so you had options trading on it immediately, but you still do have the lockup period where some of the large insiders can't sell for 90 to 180 days unless there's written approval from the board. So just a couple of things to keep in mind. I thought it would be helpful to share some context around that because we really haven't seen many IPOs until the last couple of weeks or so. And so I think that is helpful. So, and then the last point is that with a company like ARM, this also plays into it where you had it IPO 6 months ago or so, and now you're coming up to that period where the lockup period is now done. And you started to see some strong selling this week. And I think that was from insiders who are finally able to sell, dumping some shares. And so you could have some large sell orders kind of come through and see some selling pressure with that. So just a couple things to keep in mind. And those are some things that I'm watching for the week. So Judah, you have some great thoughts on the market. And so let's get right into it. What are you watching? What's on your mind?
Yeah, I mean, right now, like you said, we're just in grind mode. Like everything's continuing to the upside. We're getting huge names in these huge mega cap names and in plenty of different sectors. And like until this SPY breaks its rising channel, it's not worth fighting these names. And I think these stocks will continue to outperform. I mean, we're pretty much been up 28% since the November lows. And that's something to keep in mind because we haven't seen moves like that since 2020. So since this low, I mean, it's just been grinding higher, about 27, 28%. We didn't really speed up that much, maybe here, but we continue to consolidate. Every time we sell off, we come back higher. And yeah, I mean, we haven't seen something like that since COVID. And that's definitely something to keep in mind. As for the small caps, we're starting to break out of this 3-month range. Since this like January consolidation, we had this November push along with the SPY, came back down, and now we're like starting to hopefully trend higher through here. So what I'm hoping for is some sort of consolidation, which comes with some chop. So that's something to keep in mind. But some consolidation in the S&P while the small caps sort of take over for a little bit and break out of this, multi-month or year range. pushing back, like I guess back towards this area here. So it'll be interesting to see how people and sectors, like how everything rotates from the larger caps into the smaller cap names. So that's just something I'm keeping in mind. But yeah, until we kind of break down out of this rising channel that we've been having for the past 4 or 5 months, we're just going to keep on heading higher. So preferably some consolidation here in the SPY while these small caps continue to push higher.
Excellent. Yeah. And that was one of the things that we had talked about a few weeks ago, where is after the Fed meeting, after they're saying that they're still going to go through with the rate cuts, one of the things that really hurts small caps is high interest rates. And so if the Fed is signaling that those are going to come down, whether or not they actually do, as long as that's the path for right now, I think that they can play catch up as well. And the commodity sector, even things like the solar sector, those things are all very interest rate sensitive because they require huge, build outs for their projects. And if they have to borrow money or things like that, it could be the difference between an 8 or 9% interest rate for someone to privately borrow as opposed to a 3 or 4% rate like it used to be. So those are definitely sectors that are sensitive to interest rates. Yeah, and then you had a couple of trade recaps and things that you want to go over from last week, including CVNA, CLSK. You had some of these names that have been running for quite some time, have just incredible range. So what are you watching with these, and did you trade any of them?
Yeah, so everything here, I mean, this is just a little bit of the names that I've traded. I believe everything here we had on watch from beforehand in previous scans, and the only ones I believe that weren't there was Reddit and MSTR. Those have kind of came like in the morning as they were hitting like Hive Day scanners, and I pulled up the chart and saw like what it was doing. But basically they all have something in common, which is breaking out of these tight ranges after pushing up a decent amount. So Carvana, we have this huge breakout on this day here, which I actually took and sold as it started to like consolidate here. But as we were breaking out of this range at over 79.50, I believe, is when I took it. And, I've been holding it since. This is just breaking out of a very nice consolidation after pushing out of this long base that we've had. And CLSK is very similar, breaking out of this area over the 17 mark. We end up getting that a decent push, 45% over prior highs. And same with MSTR, as we broke out of this tight range here, we pushed higher. And then there was actually that Kerrisdale short, which provided some opportunity on the short side there on Thursday. But yeah, most of these have just been like names that have been, coming out of these consolidations, and they're not long consolidations. They're pretty short consolidations, and the prior moves have been very fast. So this is something that like I'm proactively selling and taking profits on because, I don't know. I feel like we're due for some consolidation and longer consolidation. Reddit was one that was actually noted on the hourly, and this was just, we have this kind of higher low set up here, and we broke out of this little flag down here. And I believe I noted this in IU Momo room that I was long, I believe around maybe 48.90s area, using like that hourly candle low as a stop. And then I zoomed out a little bit to the 5-minute to get an idea of like where I'd start selling, which was around 54 and then 57. And then once we broke out to like all-time highs, I was just selling along the way. I believe the highest sell was around 71, and then I sold the rest, I believe at 64, and we completely nearly round tripped. So that was decent. EH was another one that was on scan that had this great 70% move, small consolidation, and then we just break out higher here over the 815 area. And then liquidity traps, they've been working really well. OTRK was one of them that we also had on scan, on watch, over 40 cents. And we pretty much, we're gapping up from 19 cents to 63, sold off, nearly round tripped. And then it starts to push back a little bit. And this volume is no joke, 213 million volume. I mean, the stock hasn't seen anything near that in its history. And as we start to consolidate in this mid range between the low and day one highs, this is like a great example of liquidity trap, and it nearly tripled since that 40 break and build. And MESO is another one, which put in some massive volume on day one, about 68 million, and then the next day we go down to 5. And it holds that range. It's not something that completely died off. You could still see it soaking, and this was clearly something to keep on watch because if we're not breaking down and the volume is still there, like there's a reason for all that happening. So the liquidity traps, the breakouts, I mean, they're still working because I mean that's the kind of market that we're in, this grind mode. So anything setting up, tightening up, that's what I'm keeping on watch, and we'll go over some of those like next like potentials in the watch list soon.
Excellent. Yeah, and just as a reminder, those liquidity trap setups, you have that first high volume day and you have this big spike in a stock. And so like Judah was saying, it's usually like a multi-year or sometimes an all-time high kind of volume spike. And so, that signals that something changed. They either had news or they had a bunch of attention, and that brings in a lot of, longs, and it also brings in a lot of shorts because it has a huge amount of, what looks like liquidity or a huge amount of volume traded. But what happens is that after that first super high volume day, if you have 100 million, 200 million shares traded, and then the next day it drops off by 90% or so, what happens is that you had a lot of people who might be shorting it, who are saying, this has plenty of liquidity. Now, if they're swing shorting it, and the next day it has less liquidity, and then the following day maybe it has 90% less liquidity than that day, and so you can have something that goes from 200 million shares traded down to 5 million shares, down to 1 million shares or 500,000 shares. And you could have people who are short, 100,000 shares or 50,000 shares. And so when that volume really dries up and those shorts are still in there, they have to get out. And now they can't get out unless they move the price. And so if you start to see that the price start to rise back up to those first day highs, and you start to see volume starting to come in from people covering, that can cause that really nice, liquidity trap squeeze out move. So it's definitely a great pattern to learn, and we have some YouTube videos on that on the Investors Underground channel. So excellent stuff, Judah. And
Yeah, so with the liquidity traps, that's why I think it's important to be looking at the average volume rather than intraday volume because, yeah, I mean, it's very easy to take, if something's trading, for example, 200 million shares in one day, it's very easy to be taking 1 million shares. It's less than 1%, and you're if you're going to hold something overnight, you can't be holding 1 million shares on something that's trading an average of what is it, 27 million. That's just too much. So I think if you really want to trade, especially on the swing side, you got to be very aware of the average volume rather than the daily volume. You're trading intraday, then I think that's fine. Trading larger volume, but if you're planning on swing trading, I mean, you're going to end up stuck into this. So you got to be very cautious about your size, especially if you do plan to hold overnight.
Yeah, I totally agree with that. And that's a great point with the average daily volume, just to see what's the baseline for this company. And if you're just sizing based off of a one-off day, then that's not good, especially on the short side. So great. We're going to get into the next part of Scan now. So I am not a financial advisor, neither is Judah, and these are not buy or sell recommendations. This is for informational and educational purposes only. Before we get into that, though, we have a couple of t-shirt winners, and we have a free month of IU for someone, and we are going to list those winners in the text description of this video. And so check in the text description in order to claim that, and then email webmaster@iu.com to claim those prizes. So the first main watch that I have for this week is ARM. So this is an AI name, chip name, that whole theme and sector. And like I talked about in the first part of Scan, when you have these lockup periods kind of come due, and so after 6 months or 90 days, 180 days, whatever it is for these companies, and insiders are finally able to sell, a lot of times you have, a huge amount of supply that's trying to come to the market. And so I also mentioned that many times when companies IPO, they use about 20% of the shares outstanding to do it so that they don't flood the market. With ARM, they only used about 10%. And so it was a pretty restricted, supply arrangement with the investment bank. And that can keep prices artificially high. And so if you had, only 10% of the shares IPO, and now you have the lockup period come due, you have 90% of the shares that could potentially, be hitting the market over the next couple of months or year. And usually they don't want to release so much that they collapse the price. But if you have enough people who don't have anything holding them back and they want to cash in on this, I mean, it's been an incredible run for some of these names, then I would not be surprised if you see a bunch of shares hit the market and you could have some really heavy selling pressure. So I like to keep an eye on something like that where I can understand some of like the backdrop or the context around it. And if we start to stay heavy, or if the AI theme has a pullback at all, plus this has insider selling, then you could have a really nice move on the downside. And so I would be looking for something like puts on this, maybe either weekly puts or possibly a couple of weeks out, depending on the action in the market. And the next name that I have on watch is FCX. And again, this is the commodity sector rotation. The Fed's running things hot. You have things like copper doing well, gold doing well, commodities, energy. So I think that this has been a good go-to name for a theme like that. You had some longer-term options activity that was quite bullish on it. You have it breaking out of this huge, consolidation, this trend. And I just think that this is going to be a good go-to name to keep playing this sector. But with a few kind of caveats to it, is that these names don't always move a ton, day by day. And so a good way to play them is to keep an eye on kind of the ship, what's moving it, copper price, gold price, commodities, and then look for these names on dips. And then maybe instead of playing a weekly option, you play a couple of weeks out or a monthly option. And so that way you have a good level to risk off of, but you give yourself time to let it work. Because if it's only moving up a few percentage points, a day or so, you really need, a week or two or a couple of weeks to get a nice, 5 or 10% move. And you can have the options because they have a low implied volatility. You can have those do really well. They can get a 3x or a 5x on those. So that's definitely something that I have on watch. And then for the gold theme that I also discussed at the beginning of the video, there's a couple different ways to play this. I think you can go with individual like mining companies, and one of those is EQX for me, and that's Equinox Gold. You have a solid gold company, you have good management, you have people who have done this before, and you just want to see a name that can attract volume. It can attract, it has a good chart. You can potentially have some option activity head into it. So just try to find like the big solid names that are moving well with the sector. And then in addition to EQX, you could also play like GDX, and that's like the gold mining index. And so if you don't want to pick a particular name, you can just go with the entire index. And if that starts to break out, and again, this is early days. Gold had a solid move, but now I think that you could have the miners start to play catch up. And the reason for that is the margin expansion. So even though the mining business is a very difficult business long term, you can have these periods of huge cyclical moves. And if you get in early enough, and if things start to act the way that they're supposed to, you can have some really nice gains. And then finally, if you pull up GLD, that's just another way to really play this theme. So just kind of pick your poison, whatever's moving, whatever has volume. It's definitely a playable theme. And then the last thing that I have on watch in the AI sector is MU, and the memory chips sector. This has started to act really well, especially after earnings. And we talked about the rotation between some of these names, how things like AMD had some weakness, Nvidia is still strong, but MU has been a really, really solid performer. I think that you have some people positioning for the long term in this. So again, a great trader if you can catch it on a dip and play calls on it or play equity if that's your style. So that's definitely something that I have on watch. So those are the main things for me. And Judah, what do you have on watch for this week?
Yeah, that's a great watch list, Chris. Thank you for that. What I have on watch is more individual names, things that we've seen recently. Coinbase is kind of one of them. But like this move we've made is a pretty serious move so far. What I'd like to see is a little bit more consolidation. But if we do push over, this like 270 area, I'll probably be looking for some short term move, whether it's like 1 day or 2 days. It won't be like as long in my mind as it has been in the past. But this would be something that I'm lightly keeping on watch. I'll see it more intraday. I know we had that news. I believe a few days ago, but it hasn't broken down yet. It's still holding this range, tightening up on the hourly. And if we could sort of break out of this like 266, 270 area, I mean, I'll take this for a couple points if it offers that. And SMCI is the next one, which is really starting to like tighten up here. And another one that I'm kind of keeping on watch. And these could either give some false breakouts, come back in, consolidate like we've spoke about, break down. Like I'm not sure what these are going to do. Most of the times, I don't even take these trades. Like they don't even hit my alerts, or they hit my alert, and I won't like the action. They'll be up too much. I like everything here is going to be like kind of taken like into consideration as it happens. So like over this, this trend line of like 1025, 1030, I'll probably be looking to take it long. Nvidia, another one that's also sort of tightening up here. And if it could break over this like 910, 915 area, that would be of interest. ELF is one that is kind of consolidating a little bit. I mean, it's hard to see without like, having some sort of imagination. If we go to the hourly, you could see that it's holding this range pretty nicely. It's kind of starting to flag out. If we could break over this like 200 area, then that will probably be of interest to me. LAC is one that's trending very nicely here. Kind of reminds me of Zim back in December, how it's coming off the lows and it starts to tighten up. And, we have this nice 4-day 50% move. So if LAC starts to break over this like 685 area, I will probably look to take this long. Nova is a solar name that's just coming off the bottom here. Nothing so special about it, but I mean, doesn't look like there's much resistance till like the 8 area if we could get over that 625. So this is also something that I'll kind of like see how it is when it happens. But the volume has been really good. I mean, this volume here is pretty much the most that it's ever had. And if we could have this bounce back to 8, I mean, that's like a 25, 30% move. So this is something I'm keeping on watch over like the 620 area. Square is another one that looks, very interesting on the shorter frame, how it's tightening up here, but also on this longer frame. It's been in this like almost 2-year consolidation here. So if we could break over this 85, 86 area, yeah, I mean, this has a lot more to go. This looks like, how it did back here before its initial move. So I think this is definitely worth keeping on watch over that trend line area.
Yeah, and I think that Square they are a major Bitcoin holder as well. I'm pretty sure because that is the founder of Twitter
Yeah,
owns that one. Yeah, Jack.
Jack Dorsey.
Yeah, and so
Yeah,
with the master theme, MSTR or MicroStrategy, I think that you could have that kind of sub theme of the crypto of like who are the largest holders, and that could be a nice trend to play. So that's nice that the technicals line up. You have I like to look at like kind of the 3D of like why is something setting up the way it is. So I think that being a large Bitcoin holder could be a reason for that.
yeah. I mean, it seems like a big move from November, but as it starts to consolidate here and you zoom out, you see like that it's really just been consolidating for over almost 2 years. So definitely something to keep on watch.
Mm-hmm.
ESTA, medical devices, a little random of a sector, but we had this nice doubler and starting to tighten up. And I mean, if we break over this 51 area, doesn't look like there's much resistance till the 60s. So something else I'm going to keep an eye on over that 51 area. QBTS was one that I had on radar for a few days now. It's a quantum related name. it had earnings, I believe, on Thursday, gap down, and pretty much came back into the range. So if it can't break down off the earnings that it gave, and it continues to hold this range, I'll probably keep on radar over this 215 area. And yeah, I mean, I like this chart. And if earnings aren't going to break it down, then it's definitely worth watching as it continues to build and break over 210, 215. VKTX had positive earnings. We're continuing to put in these inside days here. And from day one, this setup kind of reminded me of AI back here when they announced their results. And I mean, disregarding this here, I mean, this just little, this little area here kind of reminds me of VKTX now. And I mean, this move itself is just like very powerful. It's been powerful since the MDGL sympathy gap here, and then had earnings here, consolidated for a nice amount of time, had earnings or results, and I mean now it's just consolidating for a couple months. And yeah, I mean I think this could potentially go back to the all-time highs and potentially over 100. So this is something I'm keeping on watch. It's actually something that I kind of own already from this day here, but as long as it continues to hold up, I think that it's worth keeping on watch for continuation. And now we're starting to get into like smaller cap names, liquidity trap type setups. And ASST is one, doesn't get the most volume. I mean, it's under $1, and the average volume right now is like 2 million. So something to definitely keep in mind. But I mean, we're holding this little range down here for quite some time, starting to put in a bunch of inside days. If it could break over this 75, and really 82 is the big key, but over 75, I mean, we could see a decent move, whether it's just liquidity trap or news related. So this is one I'm keeping on watch. OPGN, another liquidity trap type name, 77 million volume down to like 1 million, 2 million. So something I'll probably keep on watch over 75. LIXT is another one that had about 30 million down to 800,000. This level here, like the 430s, is kind of a big level, but I mean, the goal is not to wait for that level. It's for any trends on Monday that continue to I guess build up over 340, 350, not too far away from where it opens, but something that I'm watching for any trends. And then as it gets to this level, you could either take some off or see how it consolidates near. And if we get some consolidation and curl through, then you could add to that position. But this is something that I'll be keeping on watch for potential liquidity. And then NVFY is the last one, which has also been consolidating very nicely here. We have about 60 million down to 94,000 volume. I believe it's been like a couple 100,000 though since that day one gap. And yeah, overall, I mean, even from this day here, I'm sure like it adds to the fuel having these two like large volume days and then nothing in between, nothing now. Anything over 3, I'll probably look to take some position there. But it's a long watch. A lot of them I may not end up taking because they may not either hit alerts. They may hit alerts off low volume, or they may just be too far and too high for like a proper risk reward ratio. So this is just what I'm watching now. 14 names. More will probably come off Monday as press releases come out and gap ups, earnings. But yeah, things are constantly changing. I'm constantly adding names to radar, taking them off come Monday morning on any gap downs or fails. And yeah, that's any questions, you could feel free to reach out.
Yeah, excellent. And so is it fair to say that, even though you have a lot of watches, like your two main like go-to strategies or a lot of things that you watch, it's either like a mid to long-term kind of swing on a name. So finding a good chart with good technicals, a good theme, finding an area to risk off of, and then holding it for a couple of days, couple of weeks. That seems to be one of your main styles. And then the other style is like the liquidity traps or like short-term kind of like day trade style trades based off of a very clear, ramp up, consolidate, the volume comes back in, squeeze out. Is that fair to say?
Yeah, I mean, depending on the chart itself, that determines like how fast I want to take. Because most of the time, the liquidity traps they could be 10-minute long.
Hmm.
Squeezes out and fails, goes lower. So it really depends on like how the chart is set up, and at the same time, like if it fails, you could always sell it. So you always hold a piece and evaluate as things are progressing. But yes, that's the liquidity traps. And then as for the swing trading, usually I don't go into the weeks; it's more days, and the shorter the consolidation, the shorter time I plan to hold these things. So, for example, like SMCI, you have this multi-month, almost 6-month range, and you break out of this range. This move is going to be a lot more sustained than something that's just been consolidating here. For example, could do the MSTR. Something like this as it's breaking out of this, easier to see on the hourly, but as it breaks out of this like small little flag, high or low, breaking out of this range, this is something that I'm inclined to take profits quicker on because this move is pretty much 4 times. Yeah, like it's coming from 400 to 1600, coming down a little bit, and we kind of soak off that 20-day moving average. But as we come in and put in this tight range, I mean, after that big of a move, consolidating for just 9 trading days isn't enough for me to hold on for months and to think that this thing will continue to go higher over the long term. So yeah, I'm more inclined to take profits over shorter moves and consolidations. Otherwise, I'm just trading trends and kind of taking it day by day. I could have a plan one day and that can completely be different the next day. So it's just really trading price action. No ideas, thoughts. I don't put too much thought into these names like you do. I know you do great research on things and you have a lot more knowledge than I do in the back end of things. And that definitely helps. Whether it's like more sustained move over months and days, I'm just taking things like day by day on a price price action basis.
Yeah, well, and it's nice to have that mix of perspectives too, because a lot of times you'll catch on to things from a technical side faster than I do. But once I kind of lock into something, then I try to make sense of it. And so it's really nice to be able to, you and I talk in the room sometimes about what we're watching and share some ideas there. So
Yeah.
it's really nice. Yeah.
Yeah, even on the options side, which is very interesting because most of the times the action follows. So that's
Yeah.
also good to know and keep in mind, which I don't do. I used to try to do it, but it's difficult, and I prefer this method. But that is definitely something that's worth having under the belt.
Sure. And then just the final two things. Are you watching the cannabis sector at all? We had some big moves with CGC.
Yeah. So
Not only Germany announcing that it's a non-narcotic classification now, and then the U.S. is talking about moving it from a Schedule 1 controlled substance to a Schedule 3. So we had some breakouts in some of the weed names.
yeah, so a lot of these names, I mean, they're pretty illiquid. You got to really like this is my list. I'm sure there's more names out there, but like certain names, it's just hard because of how liquid it is. So you want to like focus on, I guess, the higher volume type names. But yeah, I mean, if we look back to September, I mean, all these moves completely round tripped. So it's very hard to believe in them. But what I'm looking for is kind of consolidation on a longer, like I want to see like a week or more of consolidation rather than just like this little like sell off day and bounce. And like I'd rather stick to these names that I have here that have been consolidating and showing more promise than taking like these short term bounce plays. And like if we do continue to consolidate for a little bit, then I'll definitely be interested. So all these names are on watch. I'm watching for like any consolidation, anything that looks similar to like what I've been showing here and my style of trading. Because at the end of the day, I mean, these things are up. Given its history, these things are up too much for me to take because they could round trip at any moment.
Yeah, and these can be great, short opportunities for people who are more short biased. Because Stan and I were talking on last week or a couple of weeks ago on Scam. We were saying like, in the market, it's usually like easy come, easy go. And so if you have these big moves on news or other things, and then reality sets in, a lot of times you do have those round trips. And so keeping those on watch for the short side waiting for it to, failed follow through, where that's basically just as a move is consolidating, breaking out, consolidating, breaking out. Once it fails to break out and then starts to slam underneath previous levels, and it's like connect the dots of just what was making higher highs and higher lows is now making lower highs and lower lows. And so they can be great opportunities. And then the very last one I had to mention is NKLA, because you mentioned that one of the names that you were watching was fueling something. And that reminded me that NKLA had news that they opened up their first, and I think only like refueling stations somewhere in California. And so this had a big move on that. So, if someone does want to try to trade these on the long side, you can, but they're garbage names, and eventually they will round trip. So they can be a good watch for the short side too.
Yeah, something like this. I believe I mentioned this in past podcasts, but like the reason why I understand that people short is because they missed the long side of the move. So like me, I didn't know that this would be a good long on this day here. It's a little random. We've had those in the past. Like this here, like it's very tough to catch this long. There's not much of a setup here. This was actually one that was on radar back here, and that could happen again. Like this is what I want to watch for on cannabis related names, and any name really, even on NKLA now. Like if it could do this again, then I would look to take that long, and even like this short one here. But yeah, I mean, this is up 4 days now in a row, and technically, I mean, if we're counting these small days here, it's up like 7 trading days in a row. And if it gaps up 2 more days or even 1 more day, then yes, that's why people look to short. But I will probably look for some sort of consolidation here. And what I really like about these setups here is when it has that big move, breaks down, and then like just builds back into that range, and we have this little like shakeout, reclaim, tighten up, and then break out of this tight area, and that was a really nice move. So that's an example of what I look for, even in shitty names, because at the end of the day, the shittiest names have the biggest short interest and the biggest target on both directions, and the volume is massive. So that is really the main goal and the main target and the main everything. So there's that. Yeah.
Awesome. Yeah. Well, this was great. And just as a reminder to everyone to like, subscribe, share this with someone, and then leave your key takeaways in the comment section. And you will win either a free t-shirt or possibly a month of free Investors Underground. So Judah, this was great. Thank you so much for coming on, and
Thank you.
we'll see you in the room.